Samir, what's your sense? There was too much of pessimism baked in. There's a bit of a bounce there, but if Jamie Dimon is to be believed, there is a hurricane coming.
So I think it's very clear that the US Federal Reserve wants that. So for example, on Friday, when these PCE numbers came out and the market went up, immediately they have so many governors and presidents, and they will just send out one or two guys to immediately start bringing down the bullishness or the market. So I guess they did want the market to misinterpret it as something positive. And so, no, don't get carried away, guys. So actually, I think the direction of the Federal Reserve is very clear, that they are right now talking down the market because they don't want it to first go up and then be disappointed with maybe the language or further hikes or the withdrawal of liquidity or whatever. So I think right now the pressure there will be there in the US, that is.
Okay. Samir,
and even
yesterday,
it started well and then fell a lot, basically for the reason that, the market is too hot. So which means now they're scared even of strong numbers. They're scared of strong employment because they feel that will give them more confidence and room to raise rates.
Yeah. So how do you juxtapose this against a market of the last 24 months wherein there was a given Fed put? Now there seems to be an opposite of that, so to say, at play. What do you do in such a scenario?
But that is why we have to be a bit scared and not say right now that Fed doesn't matter. And when you enjoyed the rally, you say Fed matters. So my logic on this is, let us say you are on the road, on a train track, trying to take a selfie. Now, no train is coming and no sound is there. So you say, I'm taking a selfie. He says, are you not scared of the train? He'll say, of course not. Suddenly, here's a sound. You can't say, no, I don't care. That's why I get amazed at these fund managers who would come and say, in the middle of the biggest aggressive hikes by Federal Reserve, or if not hikes being aggressive, but the pressure on them being highest, and they themselves saying that we have to bring it down, saying we don't care about these things. In November, December, we also would have said we don't know and therefore we don't bother about these things. But when you're in the middle of a crisis or in the middle of an event, you can't say I don't care about the event. Sure. If you look at say the market for the last 100 years, so you will see that in that 100 year, the wars would look like a dot. That, okay, sure, there was this World War I, who cares? There was this World War II, who cares if you look at a 100-year chart? But let us say today somebody says there is a war. Can you say, can't you see in 100 years this war don't matter? They matter here and now. So they matter, and therefore you have to, mentally be willing to accept that it matters. Yeah. So you will do things, you will not commit ridiculous things, that we don't do these things because you may have to do those things. You may not commit to something where, you over talk about a stock, because also in these bad times, sort of bad times, the problems come out from many companies, either because the commodity price hike, or generally somebody resigned or somebody got fired, or sometimes, God forbid, there's actual scam somewhere. So all these things would come out in bad times. So in bad times, you may not do it yet, but you mentally have to remain flexible to change.